Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, investors should rebalance portfolios in 2013 away from fixed income to take advantage of better returns in other asset classes. That's according to officials at Emirates NBD. Emirates NBD Wealth Management held a roundtable discussion this morning and stated that investors need to run a balanced portfolio of multiple asset classes and geographies in 2013, and that emerging market equities and commodities are preferred to US and European fixed income securities. Mark McFarland, the chief investment strategist at Emirates NBD Wealth Management, said that they are advising investors to hold overweight positions in Japanese, Asian, Latin American and Russian equities. He added that Chinese commodities and UAE real estate should also be looked into.
General theme is you need to take a little bit more risk now because a lot of the juice and the upside in bonds is already behind us, and now there's time to move into the equity markets and also into commodities and real estate. Well, our view is that with a yield of approximately 8% on local real estate, you're getting a very nice income return on your investment. You're not having to take capital risk because prices have come off so much since 2008. So I think if you're orientating yourself primarily towards the apartments and the corporate sector where there hasn't been as much of a pickup as we've seen already in the villas segment of the market, you've got quite a lot of upside potential there in terms of capital gain as well as that nice income in terms of dividend payout. So generally speaking, our view is that with the global recovery, with increased confidence in the UAE as a whole, there should be further upside for the real estate market, and it's a nice way for customers to participate in a sort of halfway house asset class between fixed income and equities. So now we think it's got a good outlook.
And additionally, Gerhard Schubert, the head of precious metals at Emirates NBD Wealth Management, said the precious metals market is forecast to show signs of stability due to a global recovery over the course of 2013. And he expects that gold will hit 2,000 by the end of the year.
I expect that the precious metal prices are still stable, and I'm looking for higher prices towards 2,000 for gold and just above 900 for palladium. That was my key highlights. And the drivers for these, especially for the gold view towards $2,000, is that most of the drivers from 2012 are still in place in slightly different format. If you look at the United States, you still have the debt issues, you still have the low interest yielding environment from the Fed, you still have the spending cuts to be discussed and the debt ceiling also to be these discussions to be reignited. That's number one. Number two, European issues. You have election in Italy in 2 weeks' time. The issues about Eurozone countries have calmed down, but they're by no means off the table. So you will see it will be an on-off issue of European issues coming back to the forefront and disappearing again. Third one is the recovery of China. The recovery of China should really, they're very encouraging signs, and they seem to be confirmed from the more data you're going to get. One of the benefactors of this should be the metals like copper, who are very strongly used there in an economic recovery.
Dubai Municipality and Emirates Gas signed a memorandum of understanding to treat landfill and sewage waste in order to generate compressed natural gas. At the signing, it was also revealed that the Dubai Municipality aims to produce enough compressed natural gas from its sewage treatment plants and landfill sites to power 15,000 light commercial vehicles every day in a year's time. The CNG production unit, which MGas is helping set up, is expected to be operational within a year. The Middle East aviation industry is gearing up for the region's largest airports event on May the 6th this year, which is expected to be 20% bigger than the previous edition. The Airport Show 2013 will take off at the Dubai International Convention and Exhibition Centre, showcasing the latest technologies in the global airports industry. Official figures show that the industry contributes over $39.47 billion US dollars, or the equivalent of 14.7%, to the UAE's GDP, and also plays a key role in diversifying the country's economy. Dubai is investing at $7.73 billion US dollars in expanding its airport capabilities to increase its capacity to over 90 million passengers annually. Meanwhile, Abu Dhabi is investing $6.8 billion US dollars to expand annual capacity to 40 million passengers. Figures also revealed that Middle Eastern airports are expected to handle over 400 million passengers by the year 2020. And continuing with aviation, Etihad Airways is warning its customers travelling between the 22nd and the 25th of February to arrive at least 4 hours before flights and to bring printed copies of bookings and confirmations. Etihad is gearing up for one of the region's biggest IT upgrades next week, a 10-year deal worth over $1 billion US dollars through a platform by global company Sabre. Off the back of the upgrade, passengers will not be able to check in or upgrade online, reserve seats or check flight times other than in the airport. Passengers have been assured that they will be checked in and will fly safely.